Come midnight, and Greece will default on its payments to its creditors, barring a miracle. But who poses more of a threat to global economies? Greece's default, or a slowdown in the Chinese economy and a bear market that we're seeing in China, where the Shanghai Stock Exchange is down more than 20% in just a couple of weeks? Joining me to help answer this question is GIBS Lecturer Matthew Birtch, who is just back from China. You were there last week, doing all the shins.
Yes, the Shenzhens, the Hong Kongs, Shanghais and Beijings. It was a good trip, great weather.
I don't know how you find time for the weather, but give me a sense, please, of what's really going on in China at the moment. You've been travelling backwards and forwards for years. Do you see any tangible difference in activity?
I think you've seen a slowing, of course, in the economy down to that 7% mark, but it's always hard to believe that 7% mark. There's always been opacity around what China is actually growing at. It could be 6, it could be 10. We certainly know in the heydays when it was growing in double digits, they probably reduced that figure. I think you're seeing more of a maturity in the Chinese market now, more long-term sustainable growth. You've also seen the anti-graft campaign from Xi Jinping, anti-corruption campaign, that has probably slowed things down somewhat as well. But I think it's more of a long-term sustainable growth than the kind of rapid growth that they had.
But they seem to be panicking. I mean, this was last weekend, cutting interest rates, just a touch, but cutting interest rates, and it's a sign of blinking in the face of an economy that's perhaps slowing more quickly than the Chinese authorities are able to manage as they have in the past.
I think the interest rate cut was directly linked to what's happened on the Shanghai and Shenzhen composites.
I mean, Shanghai's down 23%.
20% since June the 12th. Yeah. Big correction. I don't think it's a bubble. I think some Westerns think it's a bubble. Talking to analysts and investors on the mainland China that are Chinese nationals, they just say it's a correction. There's been a bit of a backlash in terms of people not being able to invest, and about 30% of investors are actually college students on the Shanghai composite because they're able to get their money into something that gives them a return, as opposed to the banking system. As we know, the shadow banking system was created because such poor returns were given by the banks.
Okay, so China's okay. I mean, it's growing at about 7%, give or take.
I think it's very unfair that we look at China in isolation. I think 5 years ago we could have.
Well, we need China in isolation because they're the only ones who were buying our commodities, and we need somewhere to send our coal and iron ore, please.
Well, the commodity super cycle's come to an end. But I think what's particularly happened in the past 5 years is China has become so integrated into the world economy that if Europe and America aren't doing well, China's not particularly going to do well. So I'm not saying that there's any contagion with what's happening in the ECB, but certainly these days, if global GDP is down, then Chinese GDP will be down. Whereas 5 years ago, as little as 5 years ago, that wasn't the case.
Yeah, and that's part of the result of the switch for China from consumption-led to production-led, export-led growth. They're trying to become more of a sustainable economy, as you mentioned, and by becoming more sustainable, they've taken their eye off the old balls and are juggling new ones. Absolutely.
I think they've moved away from that investment-led to domestic consumption. They also don't want to be too reliant on the euro or the dollar, what they have a lot of exposure to, particularly bonds in Europe, that they're quite concerned about. They want Greece to stay into the euro. They own large parts of Greece. 51% of the ports are now owned by Chinese companies in Greece, and it's a maritime nation. So they are very intertwined in the global economy. I do think what's happened is there's been such rapid growth. There's been a lot of backlash, particularly in Beijing, around issues of pollution, etc., which we're all very well aware of. I think if any country can get it right relatively quickly, it'll be China. But I think there's this long-term sustainable growth as opposed to growth at all measures.
But does it feel different when you go there?
There's a slight slowing. I often visit Tier 1 cities. So Tier 1 cities are generally growing probably 7% plus, maybe 10, 12%. So it's hard for me.
It's like going to Bloemfontein, no, let's not pick on Bloemfontein. It's like going to Kroonstad versus coming to Joburg, for example. Sorry, Kroonstad.
Yeah, I mean a good analogy there, Bruce. Slightly more size in the likes of Shanghai versus other smaller cities like Tianjin, but certainly in those hubs, there's huge growth. And also, you must remember, huge parts of the west of the country haven't come online yet. So I think we're seeing a devolving of power of state-owned enterprises. And if we look at the Shanghai composite in Shenzhen, you're looking at companies trading 15 times value of state-owned enterprises, banks at 7, tech companies 150 times. I personally don't think it's a bubble. Some experts might say it is, but I think it's a correction in what's happening. And just remember, the stock exchange has been going up for the past 3 years.
No, it's been mad. It's going to be completely mad, and a pullback is welcome. But one looks at China, then China is as much a victim of the global environment as its own sort of pressure to consolidate and for sustainable growth. Which is then more serious, because then you look across to 51% owned Greece, certainly in the port capacity. Greece is a problem. Defaulting on debt, not being able to pay the bills, going to a referendum on Sunday, banks are closed, pensioners are lining up, people are starting to shout at each other. That's not a happy place right now.
Well, I heard an analyst say, you know, the first rule of Fight Club is don't mention Fight Club. And as soon as this kind of the measures around capital restrictions were mentioned, what goes and happens? Capital restrictions around them closing the banks, so pensioners can't even get money out. I think that's a smaller story of a bigger story. I think if Greece exits either now or later, I think it'll happen sooner or later. I'll put my neck out on the line and say that. Yeah. But I think that China's more concerned about the destabilization of the Eurozone, because they are heavily involved.
But how destabilizing is Greece really?
Well, I think the previous argument was that it would be contagion. One falls like a stack of dominoes. One falls, the rest will fall.
It becomes like the American theory on Vietnam, circa 1960s, that communism would take over the whole of Southeast Asia.
Yeah, as soon as you leave one entity to kind of, you know, it contagions the rest. But the thing is, I think it has taken so long that certain measures have been taken in the background to protect the rest of the pig countries that they call them, you know,
Portugal, Ireland, Italy, Greece and Spain. So if Greece falls out, the others, heavily indebted, similar issues, don't necessarily want to pull out of the European Union unless it is seen to be advantageous. So the European Union has got to effectively punish Greece quite severely. Well, for the default and for departing.
If you let Angela Merkel have her way, but there again, she's heavily invested in Greece. Yeah. But I think there's a fatigue in what's going on. Yeah. I think even the media is getting fatigued around what the final.
You can say boring. It's boring. Yeah. It's a dull and boring story. It's horrible for the Greek people living through it, but for the rest of us, just get it over and done with.
But what we haven't seen yet is any type of admission from the Greek people around actually saying, right, we'll either exit or stay in, but we've got to get out of debt ourselves.
Which is why the referendum, while it's a political cop-out by Alexis Tsipras, the Prime Minister, it's quite clever, because now he can lay the blame squarely on the people of Greece, either way.
I think it's been unfair for them for a long time. They were kind of bundled into the European Union and the Euro, and they had debt anyway, and that debt was just shifted into the European Union, into the Euro, and it kind of maintained, you know, that monetary integration hasn't caused physical integration. But I think that the Chinese population certainly have come from a very low base, and that's why we've seen quite a high level of growth. And I don't think there's much empathy around the situation that they're going through. It's more economic.
Absolutely, but if Greece, which is heavily invested everywhere, I mean, if China, which is heavily invested everywhere, is worried about destabilization of the Eurozone, your assessment is Greece is a pimple on the Eurozone, that once it is lanced, the skin will heal over and the European Union will continue just with one less member.
I think what you're starting to see, and what I think is starting to come about from what I'm reading and speaking to people on the ground, there's a bit of a tug of war between America, Europe and China, Europe at the moment. The Russians would like to use, you know, the RMB as opposed to the dollar, the Chinese currency. Maybe with the Greeks' exit, they can start to use the Chinese currency. And I think you're starting to see a bit of a football between kind of Asia kind of pulling Greece their way, and America or Europe their way, and the US pulling Europe their direction.
This fallout defines the 21st century global economy then. I mean, that's how important this is. Yeah. It's insignificant and it's tiny, but the geopolitics connected to all of this is what is so defining and so interesting.
Particularly what's happening in Russia at the moment. We see obviously tensions rising, but we see, you know, there's a good relationship. Well, it's a strange one. There's a good relationship between China and Russia. And certainly China's ambitions is to have international currency, being the RMB, the yuan, renminbi, whatever you want to call it. Locals call it the kwai. And that's a lot of soft power strength in terms of trade and in terms of facilitating bank loans, etc.
Where do the Americans fit into all of this? Because they've called the shots for most of the 20th century. They're kind of used to being the policemen and the kings of the world, and they behave like they're still in charge. It feels like it's running through their fingers. The control of the global economy is slipping through their fingers.
Well, I think the Americans generally attract talent. That's what the Chinese are trying to do. They haven't quite got that right. They attract a lot of talent, so they'll attract the best people around the world in whatever industry you're in. I think what's starting to happen with them is they're obviously having to realize that they're having to have a softer kind of external power around what they've been doing. They can't have global MNCs dominating anymore. They certainly don't want to put up their borders and barriers and create an island, because some states are starting to do that, but if they do that, they're going to become a China. That's exactly what happened in China. They're part of the global economy and they have to act as such.
Where does the African continent fit into this geopolitical puzzle?
I think it's a great opportunity for sub-Saharan Africa in particular to kind of play off both. if you think about most countries, they're relatively neutral, whether it's east or west. We see more military bases in sub-Saharan African countries from the US, but we see a lot more economic influence from China. So I think it's really around how you play it. I think you see many politicians making their name China bashing in terms of, the next colonial power, etc. But I think it really is an economic decision that the Chinese make. And I think the African continent, particularly sub-Saharan Africa, has got a great opportunity to leverage and partner. But they've got to be very clever, like the Chinese were, what they keep out and what they allow in.
Okay, so what is the big opportunity that comes out of this for South Africa then? Do we have an opportunity, or do we just sit on the sidelines and wait for the scraps to come our way?
I think the challenges we have, we're too internally focused. Yeah. I think this has been discussed many times in various circles. I think the good news is that we see, particularly Anglophone sub-Saharan African countries becoming more economic and less politicized, and looking at more kind of performance-based politicians and what they can do and making the people wealthier than looking at the politics and reconciling those things. I think South Africa needs to get its agendas right, as we've all said. Policy uncertainty drives away investment, not the policy you have. Yeah. And I think we do need to align very strongly to the Chinese in terms of how we actually leverage their loans and their structure, and still formulate part of this BRICS. BRICS is dead. It's an old concept, but in terms of monetary integration, it still is a potential possibility with the BRICS Bank.
Say goodnight in Chinese.
再见.
Tajin, to you as well. There we go. Thanks for joining us this evening, and a big thanks to Matthew Birtch, the lecturer at GIBS, recently back from China. There'll be more tonight, tomorrow. Till then, Tajin.